You are one decision away from blowing up your account. Financial market trading is the most dangerous activity that human can do. It's like a ticking bomb if you don't know what you're doing, because you are responsible for your own decision. When you're driving, you make a mistake, there's a chance that the other driver pull back because nobody wants to get in an accident. But trading, nobody stops you. Your broker doesn't call you, hey, don't make that trade. You are on your own. Amazingly, my trading started 12, 13 years ago. Hasn't changed much. I learned opening range breakout, and I just continue trading that. Right at the market open, you can find a direction in the first 5-10 minutes, and then you break out upside or downside.
What do you do to specifically find the range? And then when it triggers, how do you get in? Is it Fibonacci? Is it candlesticks?
So let me share an example of today. Every trade that you take, you have to be able to put a name on it. Each trader should have a couple of trade books. I have 2 trend trading, momentum trading, and 2 counter trend strategy. But they have a name. Opening range breakout, 920, fallen angel, rising devil. These are the names that only I understand. Every trade that you take, you should be able to put a name on it. If you took a trade and you don't know what is the name of that strategy, then you probably shouldn't be in that.
It's very common you see people that are trading for 5 years, and every year it's a new market, new strategy, new approach. And that saying of 10,000 hours to master something. Maybe they spent 10,000 hours, but they spent 1,000 in different places, so they didn't master anything. How do you know when to keep pushing and keep giving something time versus this is not going to work out, you should change?
We have research papers that shows that.
Ladies and gents, welcome back to another episode. Andrew, thank you for being here. You are just about to get on a 16-hour flight back home, so we caught you in a nick of time. But what I want to explore with you, many things, but the first thing that stood out to me is if I was to design a character, the perfect trader, I would think, give him a PhD, climb Mount Everest, be a top best-selling author, and you've done all of these accolades. But what surprised me, you still fell victim to human behavior, which is a large loss, $2 million. So despite everything seeing perfect on paper, you walked through a tough period. So if we can explore what happened at that time, and despite market experience, what emotions got the better of you to have this huge loss?
I had 2 big losses in my trading career. One of them was in 2022, was $2 million, which was another one. I had this April 2025 Liberation Day. That was also $2 million. But the first one was really worse because that was a big portion of my assets. And I fell into the trap of averaging down on a losing position that they say is the scene in trading that you should never add to your losing position, something that I constantly tell people, teach people, but I did it because I just didn't want to accept a small loss. And that was the peak of my trading career. After pandemic, I made so much money. It was great volatility. And I was feeling I'm invincible. Like I figured this thing out. Nothing can beat me. This overconfidence, market always, slap you in the face. Same thing happened in 2025, very similar. I just didn't want to accept that this volatility that comes with policy change would be that impactful. Eventually, I accepted the loss, but funny, it was right at the bottom I accepted the loss. Same in 2022, right capitulation was at the bottom.
So interesting perspective I want to give is I spoke to a quant trader a few months ago. His name is Rishi, and he kind of shared an opposing perspective. So I want to hear your view on this. He mentioned that if you get into a trade, he didn't really believe in stop losses. He kept a mental stop loss. And he said, if you get into a trade and you're buying and then price goes lower toward your stop loss, now price is cheaper. And the reason you got into the trade hasn't changed, whether it's fundamental or technical, whatever bias you had, then if price is on a discount, shouldn't we add more? Is the thought he gave me, which is essentially what you were doing. So why did this turn into a catastrophe when it was on a discount and right after you were liquidated, it went in your direction anyway? For my case was because I was using leverage product.
Leverage changes every equation. I was using a product that was 3%, 3 times leverage. So if things drop 30%, which can easily, your product goes 90%. And if that thing goes back up 30%, your product goes back 90%, but from the beginning. So from $10 goes to $1, but when the SPY goes back to 30%, from $1, this one goes to $1.90. So leverage destroys you. To some product, like for example, if I trade currency, or indexes, and I'm looking at the longer time zone, maybe that works. But when you're dealing with leverage, you got to be very careful. Or if you're dealing with something that has extreme volatility, you got to be really careful because the bounces might take way longer than you want to be stuck in that position.
Whenever I've had such a similar feeling and spoken to traders who've had that pivotal loss in their career, usually in my case as well, it was I went on tilt, and when I look back, it's a flash, it's a blur. I don't really remember, but it was one day or one afternoon where I just ended up taking 15 trades, and I'm like, what have I done? But yours seems like it was across the space of weeks or months, where you had time to compose yourself and re-strategize and so forth. The reason I mention this is because when someone looks at you from the outside, it's like, oh, okay, this is a polished career, it's a successful trader. Yet you still we all fall victim to the same human emotions. So I want to kind of feel it out of, even though you had time and the ability to figure it out, you still had to stomach a big loss. What was that 4-month period like?
I was degrading every single day because I trade live in chat room and YouTube, and people saying later, some of my friends told me that we could see you degrading every single day. Like you waking up and you see the numbers is getting bigger and bigger and bigger. And then when you accepted that loss, it was just a relief. They could say that to me. For me, it started as a day trade. I'm mostly a day trader. Mm-hmm. And I just didn't want to accept the $10,000 loss. The next day it was 40,000, 50,000. Next week, I just didn't want it. Just the numbers got bigger and bigger and bigger. And I was high of the all-time high. You know, sometimes you get this recent bias that you think market has to go up every single day. And no, it's not. And sometimes 6 months can go down. And that's exactly what happened.
I remember when I've been in those positions and then the market blesses you. It comes back to break even. And you were wishing, all I want is back to break even. When you get back to break even, like, but it could go up now. You keep it in. Yeah. So the one thing that you asked me off camera just now was, how do I define the difference between gambling and trading? So I'm going to put that question back to you. How would you define the difference? And your behavior in these times, would you say you were still acting like a trader, or did you end up being a gambler in that situation?
I mean, my answer is exactly what you said before the camera. I think the gamblers don't have any positive expectancy. They're dealing in a completely random environment, and they cannot have a system or edge that over time they make money. Traders also, they're dealing in the random environment that they have no control over, but they try to build a system that they can have this positive expectancy. Like, for example, you mentioned casino and this roulette, there is black and red, and then you can do bet 50-50. But in reality, there are two also green slots, and those are casino edge. So you can win, but over long term, casino is always a statistically win. That's the edge that they have. So the traders have to build that system, and that system is different from person to person, from instrument that they're trading, from day traders to swing traders, from crypto traders to stock traders, future traders to currency. It's completely depends on people as well.
With that being said, a definition of just a trader is you have this positive expectancy, and the only way to get it is you keep placing trades that are part of the plan, because at the end of the year, that edge will appear, just like for the casino, where they might have a gambler come in, bet their life savings, and the gambler wins. So casino has a huge loss that day, but at the end of the year, they're still up. So when I compare it to this analogy of a casino, then I think, okay, we just got to think long term. But then, as you mentioned now, recency bias, that becomes challenging now, because if I got to keep placing trades and I backtested and I've got an edge here, but it just takes 6 months for it to really pick up the pace. But then you have 4 losses in a row. You feel the recent losses more than your North Star, which is your edge. How do you navigate such emotions over the decade plus you've been in the market?
I think simulation is the most important part. If you trade in a simulation for 3 months, then you believe in your system. So if I press the live trade 4 times and lost, then it's really dreadful. I might not be able to continue. But if you do that 3 months or 6 months in simulation, and you know that it's going to come back, that system is tested, forward tested, not only back test, but you actually forward test your own execution as well, then it's much better. That's why after simulation, we always recommend, I'm sure everybody recommends, go a small size before you go to, all of your full position, to build that trust in yourself and in the system that you practiced.
What is the most common psychological issue you've seen in traders that you've been around?
You mentioned tilt. I think that's one of the things that people don't accept the loss and try to make it back and make it personal rather than think statistically. I think that's the most common. Another thing that I recently had a conversation with Dr. Brett Steenbarger, which is a very famous psychologist author. He said a lot of people blame their system over psychology. And when I looked at them, it said that a lot of people are struggling and then they say my psychology is not right. But when you look at their system is not right. So you have to make sure that you have the good system before start blaming yourself.
Do you think it's harder to fix a system, or do you think it's harder to fix the mind, psychology?
I think fixing mind is harder. Like everybody knows that what a good diet is. Everybody knows that they should exercise, but not everybody does that because that discipline is, difficult.
Let's take a moment to talk about a partner of the show, a leading prop firm that is FundedNext. And it's important for me to listen to our community to see who are you working with and how can we make your experience better. And the main feedback I heard is trusted payouts, quick payouts, ability to scale, and affordable prices. And FundedNext has ticked all of those boxes, not only being a top 3 prop firm in the industry, but also having on-demand payouts, and every 10% you gain on your account, you will double your capital for free. And because in this industry, trust and reliability is the most important factor, an important guarantee that they have is that if you do not receive your payout within 24 hours, they will gift you an additional $1,000 to your payouts just for being late. So to unlock all of these benefits and work with a leading prop firm in the industry, FundedNext, check out the link in the description or use the code TOT. Walk me through your strategy. We'll explore psychology later on, but I want to get into the foundation of what is good for you. What is a good setup for you?
Amazingly, my trading started 12, 13 years ago when I started. Hasn't changed much. I learned by chance through YouTube channel, opening range breakout. And it was really amazing. It's for a stock market in the first 5, 10 minutes, 20 minutes. And I just continued trading that. I did some small adjustment to that, but I still learned opening range breakout. Right at the market open, and you can find a direction in the first 5, 10 minutes, and then you break out, upside or downside. It's only for stocks, futures also to some extent, but it really doesn't apply as much on this, currency or crypto or other form. And I'm just mastering at that pattern recognition in that first 10, 15 minutes. And I just kept it that way.
Interesting. Yeah, so I trade currency, and on this one, the opening range, usually let's say the Asia range, you would get a run, Frankfurt Open or even London Open, and then they'll go the other way. So you'd see consolidation, manipulation, and then usually expansion in the other direction. But yours is actually find the range, see the momentum, and go with that momentum in the same direction.
Yeah.
Because this is a very well-established setup, opening range breakout. What do you do to specifically find the range? And then when it triggers, how do you get in? Is it Fibonacci? Is it candlesticks? What is your execution criteria?
For me, it's candlesticks. We look at 5 minutes and 1 minute or 2 minutes. So one larger time frame and one smaller one.
The larger time frame is which one?
1 minute. The larger one is 5 minutes.
Okay, so not so large.
Not so large. Yeah.
Okay.
I know in currency you're really working on the longer time frame, but for me, because it's day trading stocks and it's way more regulated, the data is more centralized rather than currency. That might be a little bit different. So we look at the candlestick in the first 5 minutes, and then try to base on the smaller candles time frame, like 1 minute, you try to get the breakout. We do use an indicator that is called volume weighted average price, which is very important, is for stocks, not for other instruments. VWAP, if it's above the VWAP, we go long. If it's below the VWAP, we do not go long. Maybe we go short, but we try and avoid that. And the stock market is very different from, for example, currency, because the liquidity of the market is also available and it's regulated and it's centralized. So we have some tools that look at the liquidity and see where the liquidity is. Crypto has it too. And that helps us also to take that scalp or trade and breakout. But again, it's different from market to market. We use that one as well.
This implies that you're not really holding a trade more than a few hours?
Rarely more than 10 minutes. Rarely.
Wow.
My trades are usually from 10, 20 seconds to few minutes. I'm a scalper.
Wow.
Yeah.
Okay, walk me through the more extreme side of you're holding a trade for 30 seconds or 1 minute. You got so many decisions to make of trade idea, trade execution, or trade idea, trade confirmation, trade execution. Stop loss size, stop loss placement, position size, break even. Do you break even?
Absolutely, yeah.
You break even, then take profit. Do I scale out? Do I leave a runner? You got 10 decisions to make in 10 seconds.
Yeah.
Walk me through your, let's say, routine to approach this.
So let me share an example of today. I think February 2nd, today is Robinhood was gapping down 6%. And the reason for that, we looked at the pre-market opens at 9:30 New York time. So we looked into the numbers and see, okay, crypto is crashing, market is weak. Robinhood represents this retail trading was gapping down. In the first 5 minutes, sold off another 3%. So the first candlestick was red. You see that. And then we saw, and moving averages also going toward the down because when something goes down. So there is the indicator we call them VWAP, volume weighted average price. So it was below that. And we took the trade to the short side and say, okay, Robinhood is going to sell off continue today because it's weak. So that was the first 5-minute candlestick. We took the trade short. Our stop loss is if it comes above the volume weighted average price or half of the candlestick that it was going down. If it comes above the half, you get out of it. Okay, what's our profit target? We look at the daily chart. We realize that, okay, there is another daily level down here, another few percent down. And then when you start going down, you start taking partials for the amount that you put the stop loss. For example, when you took the trade to the short at $100 and you put a stop loss at $2 above, so that's 102, then you start taking at 98, 96, 94, 10% or 20% of the position. And when you take the profit, comes back to your entry point, you get out at the break even. You do not get out of it. So if you go to the chart today, you see beautiful drop, and then there is a continuation that goes there. So you try to...
So also your take profit levels are in 10% increments of your position size.
It used to be 50% because the commission were really big in those times. But now I usually do 10% or 20%. Depends how much big of a move you get. Sometimes you don't get enough. Sometimes you get a lot. And sometimes the levels are so clear that another trade that we took today, actually I did it live on YouTube, is AMD. AMD was so clear. The liquidity was so clear that, okay, I knew from 238 it's going to go to 250. So that's why I was more patient because the levels were there and the market was really strong. It comes with experience too as well.
Yes. The one thing I'm curious about here is if price hits your final target, the TP10, let's say, when you have your full scale out, then, okay, you have an overall accumulated risk to reward of each one combined compared to your risk. But I would imagine a lot of the times also you only reach the first or second or third level. So then your average risk to reward maybe is 1-to-1 or less. How do you manage, not per position, but overall risk to reward per trade, where sometimes it could be only the first position at 10%, but the rest could be break even, or sometimes you get the full take profit?
For me, the average is 3-to-1. So, 10-to-1 is a really good trade, but you don't get it all the time. I did the exactly same study that you're mentioning, that sometimes you get one, sometimes you get a stopped out, but over time, and sometimes you get that 10-1.
Yeah.
But there are two important things. First of all, don't partial too early because you're messing up your risk to reward. So that's why the patience is very important. And sometimes you get the 10, sometimes the 5, sometimes 2, sometimes 1, and sometimes negative. My average is usually 3-to-1, which is an amazing
That makes
ratio.
sense, yes.
Yeah.
And because your entire strategy is just the opening volume, the opening momentum. Yeah. When I see traders that are very momentum based, they're obviously on the lower time frame, they're looking at market open. And one thing that I see them often do is they don't want to be involved when the market starts to retrace, even if it's a retracement and then continues going, because they want to catch the first impulse. Meaning to say they have some method of riding the stop loss up to break even and then break even in profits and trail it. Do you do anything like that? Or
yeah, I don't use the trailing. I know Forex traders very, very popular because, again, longer time frame. For us, you can. But again, because I'm only half an hour behind my trade maximum, I don't see the point. Sometimes I see I have some position left and I know it's going to go up, but I just stop it because I think it's not worth it. I like to go with the peace of mind. But trading stop losses is an amazing way.
I was thinking maybe because of the VWAP that you're using for your stop loss area, you could also use that as it trails the trade.
Absolutely. You can code that. We have our platforms allow that, you can put the stop loss at the VWAP moves with you. And a lot of our traders are doing it. It's just not my style.
Fair enough. When I think of trading styles, you have one extreme, which is, long-term position trading or swing trading. And then you're on the other extreme, which is hyper scalping, if I'm to put a term to it. Now, there's going to be pros and cons on both sides. The pros here you have is probably you have instant feedback. You don't have an idea and then you wait 2 weeks to find out if you're right and wrong. And in those 2 weeks, you can make all kinds of wrong decisions. So I think that's one benefit. But then the benefits of the swing trader would be I have time to make decisions. I can make a full strategy, write it down, compose myself, and execute on the plan. Here, it's you got to be fast. You got to be on autopilot. Is this just a muscle that you work on and you get the reps, or is this an art, or is this for certain personality types only?
It's a skill very similar to video games. Because it's so fast-paced environment, it's a pattern recognition. So your mind has to find the patterns in real time and execute them. Like in the video games, I'm sure a lot of your viewers that have played video games, you have to look at it and press right at the same time, otherwise you get shot in your head. The difference is you cannot reset if it's real money. So the short-term scalping is the game of pattern recognition in the fast-paced environment. But why are we doing it? Is because the potential return is higher than the swing trading. Like potentially, you can make 1% or 0.5% a day in your trade. But on a swing trading, that's on a stock market is very difficult. Maybe crypto possible, but the stock market doesn't have that much volatility. So the pros and cons is it's harder to execute, harder to recognize, and you need probably a more expensive data feed and platform. Because our data is not feed and the data is not free. The Forex is free, but our real-time data from stocks exchanges, you got to pay for that. But the advantage would be that you can get 0.5% or 1% of your account per day on average.
Are you still using leverage in some ways?
Absolutely. I use leverage all the time. And we have research papers that shows that day trading works only if you use significantly is meaningful when you actually properly use leverage. If people Google my name and our research papers, day trading can provide meaningful result not only, but when you actually use leverage that's why options trading is option is leverage.
To be honest, it makes sense because the foundation has to be you have expectancy, you have an edge. Otherwise, it will just go the other way with leverage, as you were saying earlier. But I think the methodology here is if I can just put my money into the stock markets, into the index, and I can do 10% a year, then what's the point of having a strategy that does less than 10%? Exactly. I can just put it here and spend no time or effort. So then either you try and carve out more of an edge, you have more alpha, which is hard, or you have a reasonable edge and you add capital or you add leverage. So it's a mix of these three.
That's exactly what you said perfectly. Yeah, the leverage helps you. That's why option is a powerful leverage product. And you get 10%, and if you do the same thing that I'm doing and get 15%, is it worth it? 20%? No. But when I use leverage, you get 60% instead of 10%. That's a very meaningful result.
So myself, I'm a scalper, and I've spoken to a lot of scalpers, but I would hold a trade for an hour or two, not necessarily as shorter time horizons as you. And there's one trader that I recently spoke to who is also like yourself, really in the lower time frames, really going for momentum. And last year he did $1 million in prop firm payouts. So hats off to him. But through the conversation, as I started to get to know him, his strategy, what I realized was it was his first profitable year. So for 6 years he was making no money, and then he had a breakthrough because he mastered the prop firm game. And I could see the money box was ticked. He made a lot of money that year, but every other box was not ticked. Those other boxes were his sanity, it seemed, his peace of mind, his waking and sleeping hours, even his family life trading became his life and his life became trading. And he even said sometimes he would place a trader with one eye open in bed, half asleep.
What was he trading?
He was trading a mix, to be honest, which also seems like the issue as well. When you could trade gold and commodities and indexes, then you're trading all hours of the day. At least for yourself, you have two market open. But if he's trading the US markets and the EU markets and crypto on the weekend, again, he made the money, but he it's not sustainable is the point I'm trying to make here. So when someone finds the formula that is working for them, the natural thing to do is press. Let me squeeze the juice. Let me get everything out of it. And I think it makes sense in the beginning. Until then, you realize, okay, I've got to do this for long term. Let me take a step back and think of longevity. I'm sure you had that conversation with yourself too of what does longevity look like for me, despite me being down in the seconds time frames, down, a trade for 10 minutes. You're in an arena where it's intense, but I guess you found your balance with it. explore this with me of longevity and balance.
One of this great point that you mentioned, you gotta be, money is good when you are actually healthy and, you have the sanity. What I love about US stock market, I'm Canadian, but I trade US stock market is because opens at a certain time and the volatility is usually up to certain times. And that's enough for me. Like right now, as you and I are recording this one, the market is open, US market. And I know there are things happening, but I just don't want to be in there. And it's enough for me. I made my money and I don't even want to check it. My account is closed and I know I might have missed some move, but tomorrow is another day, another volatility. The thing that I was never attracted to currency and crypto is that they're 24/7 open. And I just don't want to be checking on my phone because that stress and anxiety constantly is behind me. And that has been worked perfectly for me. My advice to my friends and anyone that's asked me is that find something and focus on that. If you want to trade Asia, just trade Asia. London, trade open London. And don't mess around too much because you can't continue doing that. It's not sustainable.
A saying that really resonates with me is that when someone's on the edge of profitability, and they think, okay, how can I become profitable? They think is usually, I need more winning trades. And the saying goes that the profitability you seek is not in more winning trades. It's in eliminating unnecessary losses. Because at the end of the day, anybody can take a winning trade. But the problem is they get a winning trade and then 5 losses in a row. So if you could reduce or eliminate these unnecessary losses, you have a profitable strategy. What have you done in your career to help eliminate invalid or unnecessary or emotional based losses?
Every trade that you take, you have to be able to put a name on it. One of the things that we say is, we've got to build a trade book. Each trader should have a couple of trade books. I have 2 trend trading, momentum trading, and, 2 counter trend strategy. These are strategies, but they have a name. Opening range breakout, 920, fallen angel, rising devil. These are the names that only I understand. Every trade that you take, you should be able to put a name on it. If you took a trade and you don't know what is the name of that trade or a strategy, then you probably shouldn't be in that. So that's very important. Like when you give the name to your trade or character, then you recognize it properly and you acknowledging it.
So I like this a lot because now you have setups, you have rules, you have boxes to tick. And if you have 10 boxes you need to tick and only 8 are ticked, it's still not a setup. It's close, but it's not a setup.
Exactly.
So this is wonderful. However, there's going to be a lot of situations where it was almost the falling angel setup. It just missed a few things. And your mind says, but I missed it 4 times now. So I could have made this amount of money that I didn't. So how do you navigate these almost setups, specifically when it comes to allowing your intuition? Now, okay, it's close enough to the setup, but I have the market experience. I can still do it. Would you still allow your discretionary or intuition to come into play, or it's only the rules?
No, we do. And that's why we call it, for example, you can have A+ setup, A or B setup. Sometimes I feel that there is A check mark and I got a feeling that it's going to work, but it's a B setup. So I go a smaller share size. And if it goes better and gives me better indication, then I add into that. But sometimes the setup is so clear that it just shouts, take me. Then that's your A+ setup. Then you go your normal size and add more if you want to be more aggressive. It's okay to bring some intuition in there, which, I would call it experience because our systems are discretionary. But position sizing is very important. Poker is like that. The people who play poker is very similar because you get a hand and you don't know what others have, but you got a feeling that you have. Then you bet slowly based on the strength of your hand. And as the more cards are coming, you have a better understanding of where you stand. There's still element of probability in there, but you control the risk that you have by your position.
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm, Alpha Capital. And for the years that I've been working with them and the thousands and thousands of viewers, you guys that have been working with them through the discount codes of Titans of Tomorrow, it's clear for me to see why they are a top-ranked prop firm in the industry. They have also reached a monumental milestone of $100 million in payouts. And with the multiple step plans and the multiple package types they have, there's going to be an option catered specifically for what you're looking for. So you can buy an evaluation account catered to your needs at the most competitive prices, and with our discount code TOT for Titans of Tomorrow, you're able to get the most unbeatable, unmatched prices in the industry with a leading trusted prop firm. And with that being said, let's get back to the episode. I like this analogy of poker where you have your hand and you can say your strategy and you can play the odds and card counting or whatever. But then also after a few hours, you know the room around you and you know the people and you know what this guy's like, you know what that guy's like. And the analogy I want to give here is you have your strategy, you have your controllable variables, but then also in the markets, you know people's behaviors, you know where emotional points are going to be, psychological levels, or people are going to chase a high, euphoria, all these things. Is it a goal to only trade your strategy or also trade the person or the market?
The market is different. Like that's, I'm glad that you said, when you're trading, Tesla has a different behavior of NVDA, or different, from, like, for example, it's like Walmart stocks that we're trading. And over time, we realized that based on the exchanges and based on the price and based on the float, the algos or the traders that are trading it, you get a feeling that they trade. Like I like AMD, NVIDIA, and Tesla, but I really don't like, for example, trading Meta or Walmart or Home Depot. Or that. They just trade differently, and you get
Why
a
do you think
feel of
that
that.
is? Why
I
is
think
it?
one of them is that there is less volatility over there, more algos or more activity over there. A lot of retail traders, a lot of options activity are these ones, and then they have more volatile moves that are more based on the collective market decision rather than just random like trades or algos that go in and out in there. Like everybody trades Tesla and everybody trades Tesla options, and these moves and it happens are easier to catch, at least based on my experience. Of course, there are days that they also become very difficult to trade, but what we found is that when they're gapping up or down of the ranges, they are more predictable, and I like that.
I want to spend a moment on risk. So you mentioned you will size down if you are not so confident in the trade. Do you size up when you are very confident in the trade? Yes.
Yes.
So this is an interesting debate to have, which is a lot of traders are also in the static risk. It's just always the same amount of risk because you don't know what's going to happen. And I guess the worst case scenario for you would be you had a high conviction and you risked high and it was a losing trade. And then this one, you had low conviction, you risked less and it was a winning trade. So now things are messed up. Things are messed up or unbalanced, not because of your win rate, but rather because of your risk elements. Is there an art to this or a bit of a strategy, or you just allow numbers to play over time?
It's mostly discretionary. And one of the things that me as an educator, I'm not doing a good job is how actually I, increase and decrease my position. Generally, when I'm having a good days, or, really good day, market is really volatile, and it seems to me that I'm getting the waves, I become more aggressive. But there are some days that, a couple of trades that I do, it doesn't work. And I say, okay, like for example, I think a few days ago, market was selling off and I was keep trying to go long. And it was obvious that I got it wrong. Today is not a day that you want to go long. In those cases, you have to reduce your share size. But generally, when another thing that helps traders work really well is when the trade goes into your direction, even if you've already partial, but you think the move is happening, keep adding to that position. Like sometimes I partial, and then I see, no, this is a great trade. This is why we're partial. I'm adding back those profits that I took. I added back to get the more move.
With the same initial stop loss, or it's a new trade, new entry?
I bring my stop loss back to my break-even point generally. But the move is so big that no, the initial stop loss is far. You're going to bring your stop loss higher. Yeah.
So then you are actually laddering in multiple entries.
Exactly.
Okay.
And and as you build a bigger position, it's okay because your stop loss is still behind you. If you add too much, your stop loss comes right away to your entry. You don't want to add too much, but generally adding to your winning position, even though it's completely counterintuitive because you want to take the profit, but no, add to your position helps a lot.
I find this very interesting. I had a trader on the show a while ago, David Hanlon, and he had a huge year. I think in a single month, he made more than $1 million. And we were exploring this, and he said, look, if I took the same trades with the same strategy and everything, and I didn't do this, I didn't add to the winners and load up on certain trades, my $1 million would have been like 100K. And he said the real magic for me was in knowing when to compound into trades to have these huge, a big move can become a massive account growth. What is the formula, if you can kind of give me the steps behind it?
I don't have a formula for that. For me, it's really gut feeling and based on experience. And I'm not really good at it, I have to say.
Fair enough.
But I think one rule I think traders should have, in my opinion, at least for our style of trading, is that add to your winning position, but never add to your losing position. Rarely adding to your losing position helped me in my trading.
For you, when you have momentum on your side and you know, okay, things are going well, are you exiting based on price action on the left? Is that, okay, this is a previous day high, this is a structure point, whatever? Or is it just, you know, the average session range is about this amount of points, so I'll scale out in the ordinary points? Meaning, are you using average daily volume, or are you using price action to exit?
Both. We use something that in a stock average through range, which is the average of 14 days. That's some traders use that. Okay, we know Tesla in average works, you know, $5. So, you know, we can take the profit at $5 and above. That's one thing. Another thing is the daily levels that we're looking, yesterday high, yesterday low. That's another way of doing it. Another is that the pivot points indicator that we're using, again, mathematical calculations based on the yesterday highs, is very specific for stocks. We are using those ones. Or we just look at the market liquidity, and sometimes you see there's orders up there, you know, like crypto whales that this order goes toward. That could be also another target. And if there is nothing up there, sometimes you're trading all-time high. There is this, we call it, you know, no man's land. You can do based on round numbers, like, you know, 250, 251, 252, 200, because that's usually also the option market is pricing based on that. And you know, if not, just go based on the risk. If you risk $1, start partialing at every dollar profit that you're taking. That's also another way of doing it.
Now, trading, a lot of people start, including yourself, as a side hustle. You had your job, you had your career, and I guess for the need of money, you started to explore trading. And most people think, as soon as I can make a bit of money, let me quit my job and go all in on this. It seems like your belief is maintain both for as long as you can. What is the reason behind that? Because
there is less stress when you don't depend on the money that is coming every single day or every single month. So I started trading in 2013, and then I got laid off. And then I, you know, traded full time, lost money, and then I realized, okay, this is not sustainable. I had a partner, and a partner was making money, but I said, this is not gonna, you know, work. I had to get a job, and then I had kept my job until 2019. I had all of my education, books, and everything, but I had the job on the side. Having this extra income that you're having is really helping you in trading, because then trading is like a full-time poker player or part-time poker today. It's different, you know, psychological pressure on you. Another thing that I believe is that trading is dangerous because it can be addictive. So when you're separated from your mission in life, helps you in life. And it's good for some sort of income that you're getting and, you know, some addition, but, you know, you can go after something else in life. And I think, you know, again, that balance that you mentioned earlier in life, I think it's very important. People underestimate that because everybody wants to have money. Everybody wants to have the freedom, but, you know, you have to put everything in perspective.
Yeah. What do you think is a realistic timeline for someone to go from no trading knowledge to, okay, some sort of profitability?
At least 6 months, I think. I think in the first, you know, month or so, you're messing around, and then you need at least 3 months of simulation. So that would be 4 months, and then you can start a new, you know, live account or funded account or whatever that you prop from. And then for the first month or so, you're struggling with the small size, and then the psychological elements come. Then after 6 months, you're really coming into reason that, okay, I know what I'm doing. Let's get better at it.
What is your thoughts on prop firms?
Sorry?
On the prop firms, what is your thoughts on using these funded accounts?
I think it's good. I think it's a very good of testing yourself and see the seriousness of the consequence of your actions. I think it's really good. But you got to be careful which one you go and, you know, how they advertise and how the leverage they're giving you.
For the stock side, there isn't any or many.
There aren't many. We started a program ourselves within our community that, you know, we give them a simulator and give them a challenge. You trade that, all simulator. If you can make money, you know, we give you the award prize. And have been pretty interesting. Like, we've been running it for some time now, and I see our traders are, you know, some people are really making money, and then the psychological behavior that they're doing is really nice. Some of them, it's very common. So one group of people that blew up right away, done. Some of them are making really good money, and then they reach a plateau that is called performance anxiety. That I can see them that, okay, we made money, and if I just survive, we can get the price, $10,000. And then they just can't make any other trade. And I like that because you got to go through that. The good traders, when you make money, now you got to break through this and continue making that. I think it's a good
Interesting.
psychological test.
That plateau, do you think it's people that are, they just want to reach the time to then receive the rewards, or it's fear of going back to zero?
Both, but our program is 3 months. So we
It's
give them,
time-based.
okay, you got to go three months and you have to, consistently fairly trade, because some rules that we have. And then after 3 months, whatever profit that you take, $1,000 or $10,000, we give it to you. So they usually go for 1 month and a half, 2 months. It's like, if I hold it for another 2 weeks, I get $10,000 and they pay $200. So it's a good reward. But it's
Interesting.
If they don't trade, we say, okay, you quit. It's we gotta trade. That performance anxiety, then it's a good feeling and experience that they have.
And usually the ones that do breakouts and continue to push, what do you see different in them? Or is it just psychology, or is it something you can achieve? Anyone can break out.
We've had some people, and this is another very interesting part. We've had some people that they've taken this challenge multiple times and they made money multiple times. But also some people that are very experienced blew up. And that is and we show it to people, of course, not without name, but we show that people, this is a trader that I know for 5 years and has been making money. And then look at that big drop. That means that everybody can see that you are one step away, one decision away from blowing up your accounts on life, which for a lot of people is later investment. And it's like it's like a ticking bomb if you don't know what you're doing. Like financial market trading is the most dangerous activity that human can do. Like after war, maybe a real war, this is the most dangerous. Because you are responsible for your own decision. When you're driving, you make a mistake, there is a chance that the other driver, pull back because nobody wants to get in an accident. But trading, nobody stops you. Your broker doesn't call you, hey, don't make that trade. You are on your own.
Hey Titans, let's take a quick break to talk about a sponsor of the show. In fact, many people have been talking about it. A lot of noise in the industry about this firm. It is Ola Prime. And before I even consider who to partner up with as a sponsor of the show, I go through a massive due diligence process because I hugely value the platform that we've built and the direction that we're going. Therefore, the most important thing for me is trust and transparency. And a few things that are unique and that I love about Ola Prime is, first of all, they do a 95% profit split, basically unheard of. So whatever profit you make, you keep 95% of it. And most importantly, 1 hour payouts. Your payouts are practically instantly, practically on demand, so that you can really trade, make profit, withdraw it, and continue to trade. And the best thing that I love is that they've given me an exclusive, massive discount to make them one of the cheapest prop firms to work with on the market. So with prices starting as little as $38, I encourage you to check out everything Ola Prime has to offer. And if you use the link in the description or the code TOT, that will get you the best prices available with a massive discount. And with that being said, let's get right back into the episode. And to kind of summarize the conversation, we spoke about building an edge and your philosophies and specifically the benefits of your lower time frame. And then the psychology we touched upon, but I want to explore more specifically the beginning stages. What have you experienced, and what do you see in students of yours that are the main psychological challenges? Because I guess they're all trying to follow this opening range breakout approach.
Managing expectation is the most important thing. Like when you're getting from the psychological perspective, okay, I'm going to get into trading. What do you want after, you ask the question, okay, how long does it take? Okay, what do you want to do? I have $500 and I want to make a living. Okay, so let's start from there. Like you're not going to be able to make a living by this amount of money. And okay, I quitted my job, or I got retired, or I lost my job, like I was laid off, and I have $100,000. I want to become a trader, make a living. So okay, well, let's wait here. You need another job because you might lose some of that money. How do you want to pay your bills? So managing expectation is very important. And if you're lucky, you get into the good education. 15 years ago, the education wasn't as easy. There wasn't really any podcasts, some YouTube channels. There wasn't a lot of trading books. Most of the books were traditional technical analysis books. Now that problem is solved. Education is out there. There's so many amazing YouTube channels, so many things. If you're lucky to get to a good group of people, a good group of education, you start building the knowledge through the field that you want and see which one you like. In my opinion, I'm an amazing trader on stock market and I do day trading, but I have zero say in crypto, currency, futures because I've never touched them. and it's okay. If I want to, I have to probably come to you and say, teach me about your currency. What is the Asia? And don't jump over. The strategies that I do is not working on, a lot of other things. So it's very important to have a systematic education.
This is an interesting topic because when we have an abundance of information is everywhere and it's basically free for everything. Now, what you find a pattern of is, you mentioned earlier that people blame their psychology when they should look at their edge because they don't have an edge, so don't worry about psychology yet. Either way, when a trader is struggling, they look for something to blame. And it used to be psychology or edge. Now it's a case of point the finger at the person I'm learning from and actually have strategy hop. And it's very common you see people that are trading for 5 years and every year it's a new market, new strategy, new approach. And that saying of 10,000 hours to master something, maybe they spent 10,000 hours, but they spent 1,000 in different places, so they didn't master anything. How do you know when to keep pushing and keep giving something time versus you're not with the right person, this is not going to work out, you should change?
That's a very good, tough question to answer, because the definition of insanity is doing something over and over and expecting a different result. I think, when I started learning trading, I started joining one of these communities, and there was a guy, and I never really understood what he's doing. And I lost a lot of money because following him, trying to trade like him. But my gut feeling was, I don't understand what this guy is doing. Like, I don't know why he's buying, why he's selling, when he's selling, what is the stop loss. He just cannot explain it properly. And I just moved around. And then eventually find someone that, in YouTube that taught very systematic. And one of the reasons that I wrote my first book, How to Day Trade for a Living, was because there was no book. And I said, okay, let me write what systematically teach me. I think you got to trust your gut feeling that, are you in the right path? Are you in a systematic way to learn it? Or you're just randomly getting, when you were starting learning a language, just random word comes at you? Or no, you're systematically going toward the grammar, and then some of the important conversation, and then WH questions. And are you on a systematic path or no? I think people should be able to say that.
Now, I want to end the conversation on, I know it's a trading podcast, but I don't think I've ever had someone on the show that's climbed Mount Everest. So first, I want to speak about this idea that you seem to travel a lot, despite maintaining your trading every day. Let's speak about trading and traveling, and then we can speak about the journey of climbing Mount Everest.
Traveling has always been my passion, and I love to. Maybe because I really couldn't that much. Like, I was from Iran, I didn't have any money. Like, traveling with the Iranian passport was difficult. You have to apply for a visa, and of course you need money. When I came to Canada and when I got my citizenship and I got my Canadian passport, and I said, okay, I can travel. But travel has always been my passion. The fact that I want to see the world all the time and everywhere. I want to go, for example, in Norway during the Christmas time. I want to see how people live there. I love the food. I love the culture. Like, my ex-wife, she wasn't as excited as, traveling. People are different. And trading became a passion for me because it allowed the lifestyle that I loved. And it's very important because at the beginning it was really hard. I lost a lot of money, but I really wanted the lifestyle. It was so important for me to be able to do that. And I was lucky to be able to figure it out.
So you do maintain trading and traveling. It's not when you
as
travel,
much as
it's off.
possible. Like, I'm in Dubai right now. I did my trading and I quickly put my pack and I came to the studio. And it's very important. Sometimes, of course, you miss, like tomorrow morning, I'm going to miss it because I'm in the flight. But I try to trade as much as possible. I have a really nice portable setup that is good for, careful trading. And of course, at the office, I have a huge system.
Okay, let's talk about, first of all, what gave you the idea to climb Mount Everest? Because I think you're probably in a group of a few thousand people. There's not many people on Earth that have climbed Mount Everest.
4,000 people
Only
have
4,000?
climbed it. Yeah, only 4,000 people. Around 4,000, yeah.
What was the preparation like? It's probably months of...
So I've been always interested in mountain because the journey of going up in, a long process of climbing, and plus very beautiful places. Like, landscapes are very beautiful. Like, my goal has always been into the mountains. Like, when I was in school over the weekends, I was going in there. And the Everest was never in my mind until 2019. I saw a Nepali guide in China, and he said, I have an expedition company and I take people in there. And I became friend, and he said, let me take you up there. And then for a few years, I mulled it over, and eventually in 2022, I said, I want to come. And then I said, yeah, we're ready. And then I canceled because I said, I'm not going to do that. And 2023, I said, I need to do it. So 2023, when I went there, so you need a general fitness, so running and being fit. But when you go to the high altitude, you really in a different level. You have to go up slowly to climatize and then come down, rest. You go up, back again up, to stay a few nights in the high elevation to body adjust. You come down, rest, and then when you go up for the summit push from like 18,000 feet, 19,000 feet, or 6,000-7,000, you start using oxygen. So and then you go up for the last rotation. Usually you do it twice and then rest and then the summit push. So oxygen helps a lot. So at least you don't die. But the oxygen doesn't bring you to sea level. It helps a little bit. But
so from I guess the base camp to the summit, it's probably a week of just acclimatizing and up and down.
More than 1 week you go up and then come down, and then you go up 1 week again. You come down, rest 3-4 sometimes weeks down there, and then for the summit push from base camp to the summit is 4 days.
Oh wow! Okay.
Yeah, because you're gonna go camp 1, 2, 3, 4 summit and then come down. And then coming down takes 2 days. Yeah, it's really intense.
Describe to me the feeling when you got to the top.
The sense of achievement. First of all, the most important part was seeing dead bodies near some of the Everest summit. You have to cross them. Like they are like laying down. I saw a guy that died the night before. His headlamp was still on and he was connected to the rope. And as soon as that was the first body that I saw, I was like, I look at my Sherpa, I had this oxygen, and I said, I want to go back. I want to go there. And they're like, you were just there. No, go. Don't look at it. So
intense.
And they say if you want to climb Everest, you have to be willing to die for it. And as soon as I saw that guy, I was really tired, and it was early in the morning, like 4 a.m. because you start at night. And I said, okay, I'm going to die for it. I accepted that I'm going to die. I'm going to be in the news. I'm going to be my family. Let's do it and at least finish it and see what's going to happen. And when they accept the fear, you go up. Achieving into the top was amazing. The beauty, like it was morning sunrise and 5 a.m. I have a video on my Instagram. It's amazing. Like you don't know where the heaven ends and earth starts. It's the beauty of this wind and cold, and then you'd see huge mountains and the sense of that I did it. Yeah. But most important part of climbing Everest is for the last 2 days, 3 days that you're climbing is the pure mindfulness. You have no energy to think about anything else except yourself. It's the feeling that mountain bikers feel. Like because mountain biking is also so fast you go, you cannot think about anything else. It's just pure mindfulness. You do not have to have energy to think about anything else.
So in a strange way, it became blissful, or it became meditative despite intensity.
It's amazing state of meditation that you said. Yeah,
interesting. Which is something you'd recommend for people to try?
If climbing is your passion, yes, because it's a harsh environment. Like it's really cold, it's really dry. You have to be in a tent. There's no bathroom. If climbing a mountain has always been my thing. But I do highly recommend people to go there. Man. It's pretty expensive, but
how much would it cost to do it right?
For me, it was about $75,000. But you can do it cheaper as well if you for example, I flew into the base camp and
what's the main cost? Is the chaperones you have around?
The main cost is the permit. I think it's $25,000 only permit. And then the next is the cost of expedition company that you're there 2 months, 1 month, month and a half. So food and tents, and they provide some things. And then the equipments that you want is probably $5,000 of the suit and boots and everything.
It would be that expensive. Wow.
You can do it cheaper too, but I want it to be comfortable.
Right. Yeah. Amazing, man. And last thing I want to give you the opportunity is you have a book. So if you want to share with the audience about your journey as an author.
Well, if you're interested in stock market day trading, how to day trade for a living could be a very good book. I highly recommend people to go through that. Quick read, you can get an idea of what's going on. And of course, I have 5 more other books that goes into the psychology, goes into the more advanced strategies. But those are useful if only you really are interested in active day trading. And if you have any question, you can always reach out to me. I'm in all social media, Andrew Aziz. Bear Bull Traders is the name of my brand. I manage my own social media and, love to, I read the comments as well if you have any question. And we also have a community both in YouTube for free and also in our website that they can come, and we have a lot of resources and companionship that we can offer.
Beautiful. Andrew, thank you for your time. I know we got to get you to the airport. We made it happen. I'm glad. We've been trying for 2 years to line this one up.
That was a great conversation. Thank you.
Andrew, thank you very much, man.
Absolutely.
Beautiful.